Today we're going to reveal what to expect in your first meeting with a mortgage broker. We'll discover the ideal time to have that first meeting, what information you'll need to have ready, and what questions you need to ask the broker to help you work out whether they're the right one for you.
Welcome to Your First Home Buyer Guide, the podcast for first home buyers who want to move it along and become homeowners. But most importantly, it is for you to become an educated home buyer.
I'm Meighan and that was Veronica. We're both buyer's agents and probably old enough to be your mum. But it's a good thing because between us we've got over 45 years experience to share with you and bucket loads of stories about avoidable mistakes. Together we're going to make sure you get unbiased and real information you can rely on. Allow us to guide you on your home buying journey. We want you to become an educated home buyer so that you can stop looking for your first home and actually become a proud homeowner.
We've got loads of great tips for you in this episode, and if you'd like more useful tools, head over to the website homebuyeracademy.com.au, and there you'll get access to our free mini course, How to Price a Property Like a Professional. You will also find the holy grail of home buying education, Your First Home Buyer Guide, the online course for people who want to become educated home buyers. We created this for you to help you get on the right path to home ownership for your first home and beyond.
But before we get into the interesting stuff in this week's episode, we've got the boring bit, the disclaimer. You of course know that nothing in this podcast is to be taken as personal advice. We always recommend getting the advice of an expert in their field who takes the time to understand your personal situation. We've done our very best to ensure that the content is correct at the time of recording. Things change rapidly, so always check with the relevant government authority and your trusted advisors to get the most up-to-date information.
Today we're talking about your first meeting with a mortgage broker, how to be best prepared and what to expect of them. But before we get to that, what is your special house in the video behind you today, Meighan?
It's a container house. It's a shipping container house. I love it. Look at that. Check this out. Can you imagine how many shipping containers went into creating that? And I had a little look at the internals. Of course, it's in the desert in the US. But there's this sort of this central living area, and then there's these bedroom pods and bathrooms and all of these sort of pods that come off the central area, and then the light just comes in. So anyone who's watching the video, the light comes in through those lighting shafts in an indirect way, so it's not as hot. Really love it.
Imagine going to the loo on one of those things.
It looks like a big asterisk that's just landed like a meteor in the middle of the desert. Pretty cool.
Like pick up sticks. You know when you play with the kids and you drop the sticks and the pick up, the sticks would, that's what it looks like.
Pick up shipping containers. Now, you can hear another voice on this podcast. It is our special guest. It's Aidan Hartley. He's a mortgage broker who specialises in helping first home buyers. Now, Aidan's business is called Blue Owl Finance, which he started around the same time we created Your First Home Buyer Guide in the middle of 2020 lockdown. So welcome, Aidan. Thanks for coming along and sharing with our listeners today. But before we ask you to take us through a first meeting with a broker, what on earth made you decide to start a broking business in the middle of lockdown?
Yeah, it's an interesting question. So, I've been flicking between mortgage broking and banking for 12 years total, and I was about 8 years in. And one thing or another, COVID started, I had a massive bonus due and the bank's pretty much said, we're not going to pay bonuses for this quarter. So I was like, okay, I've just taken on a lot of debt. We just bought the family home and, it just felt like I lost a bit of control around, what I'm doing and the income type. So I've always thought about joining my own thing and had a bit of cash buffer behind me. It was pretty crazy at the time. It was... this was literally at the same time people were saying, we'll get 30% drops in property values.
Yeah.
So bit of a risk.
There were some crazy predictions out at that time, wasn't there?
Yeah.
There were.
But, I had a bit of a buffer behind. So I just thought worst case, 12 months down the track, I can always get a job back at the bank. So, there was I don't like plan Bs too often, but there was a backup.
So here you are 4 years later.
Yep.
Still out of the bank. Well done.
Yep.
Well done. Look, okay, we're going to run through a typical first meeting. Tell us, when do people usually book this from your experience?
Yeah, random. It can be at all stages. Some people are just purely curious. Some people triggers they've got a new job on a higher income. A big kicker is normally a change in circumstance in their living. So the minute what we're seeing very common is rents increasing. So they've gone from, 500 a week to honestly 650, 700 a week. And they're like, well, I know interest rates are a lot higher now, but maybe this is the kick. I need to move into my own place and I can start paying down the debt. So yeah, a bit of a mix in circumstance, and a lot of just curious people wanting to see what's possible.
Yeah, I'd never really thought that life changes might trigger that idea of going, oh, let's contact a broker and see how much money we might be able to get.
Yeah.
As opposed to, always in my mind, I'm thinking, oh, people are squirreling away, saving. And then they go, right, we're ready now, we'll call a broker. But you're saying that actually that there are other external forces that might prompt these calls.
Yep. I mean, even the parents could be moving places. So we had one recently. The parents were moving to another state and they had a job here, they had partner here, and they had to move in somewhere. So they got a bit of a family assistance, but that was another prompt to, they're moving anyway. Why not?
Quite external factors in some of them, aren't they?
Right.
Yeah, why not own the next property?
Yeah.
Yeah, I like that.
Do you think that most people should come to you earlier than they do? Do you think that, there's, it's sort of a bit weird because I had that question in my mind that I wanted to ask you because I'm thinking everyone's saving, and at some point that they decide to contact a broker. Yeah. But it seems to be that there's external triggers. But for those that don't rely on an external trigger, do you think people wait too long to talk to a broker?
Yes. Yeah, they do.
Yeah. How many times have you had someone come to you and go, I've put an offer on a house or a unit? Or
that's far too long.
Way too late, isn't it?
Yeah, luckily not too many of those. Mostly the ones to answer that one, Meighan, is they've normally gone straight to a bank and maybe they've got like an automated approval whereby they've just chucked in a load of numbers and it's just spat out a pre-approval. They've gone to the auction not knowing any different, and then the Monday the bank's gone, oh, we don't do high-rise properties in that suburb, or we actually need a 30% deposit for what you're trying to buy. So we do get some. Luckily, most people are pre-approved. Whether it's worth the paper it's written on or not is a different matter. But we probably get more people who are saying, oh, I'm going to buy next year than we do that have failed with finance on another property. And yeah, I'm always open to those conversations as well. Even if they'll put on the booking that we're not buying for 6 to 12 months, I know that we've got a few tricks and tools in the armor that we can get them on a lot sooner. It's just lifting up the rug, seeing what possible options are there for first home buyers.
Certainly from our point of view, we encourage people to talk to a broker before they start their process so that they know what they should be doing and what sort of things, how to get financially fit, how to improve their situation if they have to. So those conversations aren't necessarily started at the point where they're ready to buy a property, but it's the training bit to have the conversations with the broker. Do you see many people come to you that far in advance, like just in a preparation kind of phase?
Yeah, they do, and I can do 2 or 3 appointments with some clients, and often they'll flat out say to me, "Look, I'm not going to do a deal now. I'm not going to purchase now, so you may not be interested in talking." But I'll still have the conversation with them because, of course, I know I can help them whether it's today or in 6 months or 12. But more often than not, there is a way to get it sooner, and there's things by having the chat with a broker. It can be, you've got an average credit score that you need to start building. Maybe we refer you to a credit repair company because, you had a late payment on a car loan 4 years ago, or you've got some utilities that defaulted from a previous rental property. It can be all these things that people don't know about. It can be the actual amount of deposit. Do I need 2% or 5 or 8 or 12? So we need to know the premise of how much cash I need to get from parents or savings or wherever it's going to be. And also, people, believe it or not, base employment decisions on their ability to borrow. So it's very popular now where people will move to contracting, or they'll open an ABN and they'll start their own business as like a contractor, or they'll subcontract to different employers. And that can restrict your ability to borrow for another 6, 12 or 24 months. So, I'll say, maybe you want to get the home secured before that. So I love doing the future planning, because if they come to me and they've opened a new business the previous month, or they've just got a car loan, that's another popular one. It may be too late then. So I'd much rather have that nurture and and a bit of education to put them on the right path for the first place.
That's such interesting. There's so many interesting points there, because the reality is that, like in buying a property, we don't know what we don't know. And obviously in borrowing the money and putting forward yourself as a borrower, as a potential customer to a lending institution, you don't know what you don't know either. Is there a point where it's too early to come to you? Like, some people, the government's got a 5%, deposit guarantee out there. Yeah. My parents are prepared to lend me some money, but I've never saved $1 in my life. Is that too early? I mean,
no. I mean, there's a couple again. So the first one that comes to my mind with that sort of scenario, Veronica, is probably a guarantor loan. So I know the two of you do, but essentially with a guarantor loan, you literally need zero deposit. So that may seem, possibly irresponsible lending, but maybe you've been renting before, or there's a reason why you have no money. So yeah, in theory, you can have 0% deposit, no money in the bank account. We can look at a guarantor. Another one, I mean, you could have assets. People may have a couple of cars. So he, spoke to a guy recently. He had a 30K car, and he had no cash. He was able to sell the car. That was sufficient for a 5% deposit, and away we go with that. So,
oh wow,
yeah,
that's just mind blowing when you think about it. You could have a car or a house. What do you choose?
Yeah, and that's a very common one. And a lot of people will choose the car, and that's fine. But it probably pushes your purchase back by 3, 4, 5 years. So it can, for most first-home buyers, because they don't typically have a lot of cash or disposable income, especially when interest rates are closing on 6.5% now. So most cases, it probably is one or the other.
Fascinating.
Well, okay. That's first thing I'm going to put at the top of the list when I'm talking to first-time buyers.
Do you have a car?
When you're driving.
Yeah. I've heard people...
Just a tip on that one as well. So we actually ended up doing the deal with NAB, because normally you need 3 months genuine savings. So normally the banks will want to see 5% in your bank account for at least 3 months. I spoke to a few different banks for this guy, and I didn't know this until I found it out. But if you have assets outside of savings or shares, such as a car, and you've held it for more than 3 months, they'll treat that as a genuine savings as well. So he literally sold it on the Monday. We submitted the next day, and we were pre-approved a couple of days later. So he didn't even have to wait the normal 3 months. So, these are things that without chatting to a broker, you'd have no idea about.
Absolutely. Yeah. And how many brokers have we spoken to, Veronica? And
we've heard that one before.
Haven't heard that one before.
Yeah.
Tell me, what information does a prospective borrower need to bring to that first meeting with a broker?
Yeah, you do need to be prepared. And I'm not.
Get your pens out, everybody. Get your start taking notes.
And I'm not someone who insists on sending me 15 documents beforehand, because you could spend 2 or 3 hours gathering tax returns, pay slips, ID, bank statements, and it doesn't go anywhere and you're not eligible. Whereas a 10-minute conversation could have uncovered those things. But I do like everybody to be nice and prepared, and we do have a flow before the conversation itself, just to make sure they've got everything ready, because it's garbage in, garbage out. If I don't know what your income is or how much cash you've got or your liabilities, like, what do you want from me? I can't really give you sort of a borrowing amount. So we're wanting them to be prepared, and that's for the person we're speaking to, and often the partner isn't on the conversation as well. So if you've got a partner, please just know their information inside out. Is it 90K? Is it 90 inclusive of super? Do they have HEX? These little details can swing affordability 10, 20, 30%. So if you want an accurate borrowing within 10 or 15 minutes, we can do it, but it does depend on your ability to provide correct information.
So you don't really need
to do a list. Sorry, Veronica.
So you don't really need the pay slips and the actual evidence, but you do need to know the actual numbers and all the details. And I think that's an interesting point, that you're saying that in most of your calls, you're only talking to one of the borrowers, particularly if they're in a couple. And so I know in our buyer's agency business, when we have an in-depth pre-meeting with people before they become a client or before we quote them for the service, I want to meet both of those people. I don't want to just meet one. But you're saying you tend to meet one at a time. So, you have to come up well armed with your partner's info. But also they've got to know all the detail, like you say, with HEX or a car loan or whatever. They've got to know all the hidden stuff. They might forget stuff like that. And if it makes such a big difference to the borrowing capacity, it's pretty important.
Yeah. And I think this one for me isn't too much strategy. It's just, are we on the same page? Can we work together? Do our personalities match and we're the type that are going to get along? Because that's important to me. I'm not taking everybody on. So it doesn't make any difference to me if one or both, because the chat's just about, are we on the same page? Can we find a route to make what you're trying to do possible? Then we'll get all the docs. Then we'll just go dig down into the strategy. So this is, what if we're going for any schemes, if we're going guarantor, which bank we're going with, what the repayments are. That's a much heavier conversation. And I'd rather do that post having all the docs, because it's very rare that we'll get the information 100% correct. I like it to be 95% correct, but usually there's a bit of discrepancy there.
Okay, but this is great. So you're not in this first meeting. It's not just about you, the buyer, trying to work out if this is the right broker for you. It's also for you, the broker, trying to work out if this is the right client for you. So I think that's an important two-way. That's an important distinction there. Mm-hmm. So what sort of questions would a good broker ask? One that's really concerned about making sure that the fit is right.
Yeah, so we're looking at the type of borrowing they're trying to do, because I don't want to specialize. I'm very niched in what I do in first home buyers, so I don't want to do all of the niches. So if you're looking for commercial SMSF, if you're buying in a trust, if you're buying a big commercial property or a farmland, I'm probably not the broker for you, and I can quickly find somebody who is. That's fine. I've got a lot of referrers that I pass business to, and they'll also pass it back because they specialize in what they want to do. But really, we're trying to establish how much money you've got and how much we can get from the bank. That's what I'm there to do on the first conversation. And that's where we'll look at, as far as how's your credit history? Because we always pay to view their credit history before we submit, because that is probably one more important than probably it was a few years ago, because cash flow can be a bit more restrictive these days. So we're seeing a few more credit card late payments and lower quality types of applications. So that's probably a big thing that we're looking at now is, do you fit the credit profile of the bank? Because everyone wants a cheap rate, but often cheap rate lenders don't want you because of low deposit, short-time employment, poor credit history, whatever it may be. So we're just trying to, I guess, gauge if we should proceed with collecting documents.
That's a two-way interview. It's a you assessing them for will a bank or what type of bank might see them as a reasonable credit risk to lend money to, and how much might that be? Them asking the right questions of you and giving you the answers that will see if there's a fit for you from a company and personality. We call it a personality test in our business. Can we work together? Is there a values fit there? I would imagine if someone came to you and said, look, I've got some stuff, but they're trying to hide it. They're probably not the kind of client that you want if they're hiding things. And would they be?
Yeah, I mean, we had one probably last week, and it was, my uncle employs me. How much do we need to show on the payslip?
Right. Yeah.
And I'm thinking, yeah, that's fine, but what happens once you actually get the loan and your uncle changes his mind and you're no longer able to repay that? That's going to come crashing down like a house of cards pretty quickly. So it's those type of things. So I'm looking at where they came from. Are they from someone I've dealt with before? And just running through the normal checklist, I've got sort of a few things that I've got a decent BS detector by this point, so that helps.
Fair enough. So what is it that first home buyers would typically want a broker to tell them in the first interview, in the first meeting?
Yep. So definitely the end piece is how much, like if we were to go to auction tonight, what could we go for? That's one thing I'm trying to establish from the conversation. We're going to auction tonight. What is the maximum we could do? I'm not saying go to auction. I'm just saying what could be possible. So we're looking at, the equation is basically the money you've got plus the money from the bank minus the fees equals the amount we can purchase for, which is ultimately what everyone's looking to do. A trend I found a bit more recently as well is rent investors has become massive. So when we have a booking that comes through, we always say, what do you want to get from the conversation? What's the goals? Just so I've got some idea of what we're trying to achieve. Probably 50% of them are now saying, I want to know if I should buy my first place as an investment or if I should buy a home. And I reckon 3 years ago, that was 5% would be asking that sort of question. So I think the rise of other influencers, if you want to call them, there's a few sort of buyers agents and brokers that are pushing rent vesting and the benefits and the tax benefits, and growing your portfolio seems a big one. So we are getting that question a lot more. Should I buy a home to live in first or an investment?
That's really interesting. And I did a strategy session in my business with somebody who went down that path very recently, only last week. And on the back of that, Meighan and I were having a conversation about doing a whole podcast episode on should I rent vest or not. And it's interesting that you say that. So we keep your ears peeled, listeners, because we're going to come up with that in a few weeks, I reckon. Very important topic. And it's interesting that you say that. I mean, what about grants? Are people coming to you saying, how much free money can I get from the government?
Yeah, definitely. And going back to this sort of partly answers the previous one about the rent vesting, because if you've seen any of the government schemes at the minute, and there's 4 good ones, they're not for investors. So what it comes down to often is you'll need a much bigger deposit. I mean, for a first home, you can probably get away with 5% in most cases, whereas an investor, if you want even semi-decent interest rates, you're probably looking at closer to 17-18% as a deposit.
Wow, interesting.
Yeah, I mean, not so much the affordability, because the affordability is fine. If you can afford the rent, you've got the rental income, you've got tax deductions against the loan for the investor loan. So the affordability is okay, but often people will, after the conversation, when they're not eligible for the grants, they'll look at the owner occupier firstly. So yeah, everyone wants to know about the grants. They're a big help.
Yeah, I'm sure they are. I mean,
if they're aimed at the right property, and that's something that Veronica and I are very passionate about, is not letting the grants drive your decisions about which property is the best one for you, just to get some free money.
Yeah. Now, you've been kind enough to send through a spreadsheet with your back-end questions, and one of them really intrigued me. It was lenders that we should avoid. Now, tell us why you might specifically avoid some lenders.
Yeah, it's basically so I don't stuff up, because, if I can spend, it can be half a day, it can be 3 or 4 days analysing the documents and sending different scenarios to different banks. So, for example, if I whittle it down to 1 or 2 banks and I'm saying, we need to go, I'm not saying this, but let's say we go ANZ, and then next minute they go, my dad's credit card was defrauded with ANZ and I would never do business with them. I've kind of set myself up to failure. So it's, have you had any horrible experiences?
Right.
9 times out of 10, it's a no.
Yeah.
And I think people aren't too sticky these days because, everyone banks with CBA, for example. So I'll throw in the question, do you want to go specifically with CBA or are you open to the best offer? 99% of the time they'll say, I don't really care the brand at the top of the statement. Just get me the best loan.
It is interesting, isn't it? That all that money the banks spend on marketing and you got a broker who's saying most clients don't give a rat, so you just want the best loan. Now, I mean, you also ask what is important in a loan, and do you find that people often focus attention on the right things here, or do they mostly say, I just want the lowest interest rate?
Yeah, probably the latter. They're probably looking at lowest interest rate, and that one I've kind of tapered off using because of that reason, Veronica. It's the cheapest interest rate, but the cheapest interest rate, it's not going to be quick. It's going to be paper documents, JP'd. You're going to have to get something ID witnessed in the branch. You're probably not going to be able to borrow the amount. You probably need a huge deposit. So I kind of taper away from that question. It's more around, if they've got an understanding. So often an offset is a good example there. So they'll say, I definitely need an offset, which is something personally I'm a big advocate of naturally. But just seeing if they want, some will say it has to have OSCO, so whichever bank we're with, it has to do real-time transfer, or has to be a nice system, or, you know, I like having a local branch. So it's just getting an idea of what they're trying to do. Because really, at the end of the day, I'm not trying to force any products on anyone. It's got to be a natural fit.
Yeah.
Of course, yes, rates and policy, but I also want you to have a good time. I don't want you to get to settlement and then you're stuck with an average bank that you don't enjoy. You know, you got to call them and wait on hold for 2 hours and everything's clunky and doesn't work. So I'm just trying to find a bit of a fit.
I had a conversation with a broker yesterday, and it really made me think, you know, it's something I wanted to ask you about. Timing is really important. And we talked about timing earlier in the episode of when someone comes to you. And I mentioned, you know, when someone's bought a property is probably really a really difficult thing to do. But timing is important because there are some lenders out there who could take 5 or 6 days just to pick up a file before they start assessment. Whereas there are other lenders who can turn things around in 6 hours, but it's going to come at a cost. There's going to be a trade-off between those different organisations in terms of turnaround time. Can you just expand on that a little bit?
Yeah, and one thing I always mention when they say I want the cheapest, it's like, well, yes, you want the cheapest, and so do I, because I want you to stay with it. You know, my income is also linked to your duration staying with that bank. So, you know, I'm also invested in you staying with them, but I mean, as you both know, a 5-day cooling off period is probably one of the biggest things that we're looking at. So as you mentioned there, Meighan, if your lender's taking more than 5 days, then we're setting ourselves up for failure. You're going to find a property on a Monday, make an offer, cooling off ends Friday, and the bank's picking it up next Tuesday. Yeah, he's already gone and someone else has bought it by which point. So, and really, interest rates are pretty similar these days. There's not a huge gap. You might pay 1/10 of 1%. You know, we're talking $700 a year on a $700K loan, for example. And you're not married to this bank. You know, we can refinance later. So don't be too like this is a 30-year loan, but there's no contractual obligation to stay with them for 30 years. So as soon as you're eligible to switch, then we can go with a slower, you know, not a slower, but a lender that's got lower interest rates that, you know, if it takes 3 months, so what? Because there's no time rush. So we've got to fit the application based on the purpose. Is it a purchase or a refinance? And we've got different objectives depending on which way we go down. And there's a few lenders I love at the minute that very rarely let me down. And
I imagine that changes too when policies change. But, so what questions do you recommend the buyer ask the broker when they meet for the first time?
As in the process, or to suss out if the broker's...
Well, both really, I guess, is so they understand the process, but also to work out whether that broker's right for them.
Yeah. I mean, probably something along the lines of, you know, do you own yourself, and what process did you go through? I like to deal personally with people who are also doing the thing that they're selling. So that'd be a big one to me is, you know, I reference it to, would you go with a swimming instructor that couldn't swim? So you need someone who's doing the thing themselves, not just pushing it on other people and selling it. So I think that's a big important one for me. And also, you know, do you have any sort of bias to any banks? Because I know a few, you know, perhaps push the same lender every time. So it's good to have a spread.
Yeah.
Love it.
We actually have a free checklist that listeners can download with the 5 must-ask questions to ask your mortgage broker, and you can go to homebuyeracademy.com.au/brokers to download that. We will put the link in the show notes. We also have one guest question that we always ask. Meighan, do you want to ask it?
Love to. Aidan, what is the one thing that you know now that you wish you knew when you were a first home buyer?
That's a good one.
We should have prepped you with this, shouldn't we?
Yeah, probably ways to avoid lenders' mortgage insurance, because we paid $17K on a $500K purchase. So if I would have known back then, because we purchased with the old 3% deposits, which don't exist anymore.
Yeah.
So probably
a long time ago.
Yeah, because if that's the one thing I love and hate, it's lenders' mortgage insurance. So any strategy, I love waiving or getting rid of lenders' mortgage insurance for clients. So, you know, I went into a big yellow branch when I bought mine because I banked with them. Brokers weren't as popular then. So yeah, chat to a broker and not necessarily tied to the one bank.
Wonderful.
Good point.
Yeah.
All right.
Thanks, Aidan. Thanks for joining us. A quick note to our listeners. You might think that we cover everything you need to know in these podcasts, but a word of warning, we do not. We just scratch the surface here. If you really want to be an educated first home buyer, you need to learn all of the steps and how to do everything in the right order.
Our first home buyer guide course only costs you $990, and you get direct access to us to help guide you through your negotiations. And trust me, you will overpay a hell of a lot more than $1,000 if you do not know what you're doing. So we encourage you to join us. Check out your first home buyer guide, the course.
In this episode, we've only touched on a tiny part of the huge amount of things you need to know to become an educated first home buyer. There is so much more for you to do. You can learn all of the steps in the right order and avoid all of the mistakes that others have made in our 10-step online course for first home buyers.
If you'd like to learn more about the right process and avoid making rookie errors, become an educated home buyer. Head over to the website, check out your first home buyer guide, the course that we have created for you. And don't forget to subscribe to the podcast so you won't miss an episode. And if you've liked what you've heard today, please give us an iTunes review. It helps other people find us. And of course, I know it's a bit cringy, but we're going to ask for 5 stars. Thank you.
Thanks for joining us. We hope you've found this really useful. And if you have, please share the love with others who you know are in the same boat. We'll be back next week with more priceless stuff.